Scott, so when do rates start to rise, and what does that mean for stocks?
Well, first off, rates aren't going to rise fast enough, right? The Fed should be announcing some kind of an increase in the discount rate or something at this meeting. They're not going to do it. But the reality is that, I don't think we're going to see a meaningful increase in rates at least through the end of 2010. The Fed probably will be on hold most of next year, and I actually expect that before the end of next year, we'll see Treasury rates lower than we are today.
Lower?
Let me ask a good question. Since we both could talk all day, and we all talk all day about what the Fed will do,
right.
Let me ask you a question. What do you think the Fed should do?
Well, what the Fed should do is now they should raise the discount rate immediately as a signal. It's a meaningless gesture.
Are you trying to kill the recovery?
Well, the recovery is well established at this point.
I don't think the discount rate at 25 basis points would make a difference. I agree.
No, I agree. It's largely symbolic, right? I think that would actually be good for bonds. I think if the Fed did that, it would make them the great inflation fighter that they're supposed to be, and it would be viewed as preemptive, and probably interest rates would come down.
All right. Well, you asked him what he thinks that they should do. What do you think they really are going to do, Dan?
Well, I think they're going to.
Because last time I checked, Scott's not going to be the head of the Federal Reserve yet.
No, but we all talk all day about what the Fed will do, and I think at this point it's pretty well ingrained in the market that whatever they do tomorrow, if anything, will be nothing in terms of consequence. I think it's likely they stay on hold for the foreseeable future. At Miller Tabak, our general outlook is that it's very difficult to provide liquidity through the mortgage-backed security purchase plan and drain it at the same time. So really a substantial move in terms of monetary policy has to wait until at least the end of the first quarter. The path of economic growth thereafter will, of course, determine how rapidly they move towards tightening, either through implementing large-scale reverse repos or just through what's called a, quote, open mouth policy.
Well,